They say success lies in the extra mile. We call it the extra mile principle. Why? The extra mile has no traffic, just a few people try that extra mile, the one more time. And that one more time does not expire. Yes. Uh, Napoleon Hill said that old man failure is always on the path to success, waiting for those who fail the persistence test. Yes, persistence test. So if you fail the persistence test, you fail. And on that note, we can go to the agenda of today, which is understanding the finance bill. And welcome, Jeremy. We were with him last time, you people remember, and he told us how SMEs need to comply with taxes. Yeah, so we are happy to have him back at the right time. And this week, we are also going to have him in our Rotary Club on Wednesday. Yes, Jeremy, I hope you are ready now. Yeah, so I see it's ready. If you are ready, you can take it up.
Thank you once again, OPP. I'm glad to be here again, Power Monday. And I think I just want to approach this from a more of a conversation kind of approach. I have seen there is already a lot of analysis and briefs that have been doing rounds, and honestly, I also think there is quite some misinformation, which is not good, because my thinking is, as a nation, especially as a democracy, we would want to have honest conversations. We will want to be able to evaluate, knowing that what we are evaluating, is it accurate, or how is it really going to affect us, and so on. So, of course, the first thing to note is that the bill is not yet law. Of course, it is, you know, there is the process that a bill goes through before it becomes an act of parliament. And I think this week it's being tabled for the second reading, and then of course there is already input from the public, which Parliament has received, and we are hoping that they are going to drop some of the provisions, which in my opinion are not very palatable for businesses. So let's start with the brief context. And what we see is that this bill comes in what we call a VUCA environment. VUCA is a volatile, uncertain, complex, ambiguous. I think the world has been said to be in that. And of course, it is also the first bill for the new regime. And it comes in the wake of an authority that has missed its collection targets. One of the, or you could say the elephant in the room, is debt. There is a huge debt which we face as Kenya. And of course, that could be driving the desire for the current regime to want to tax more and more. Maybe the question is whether that is the way to go. The other thing we see with this regime is that there could be some uncertainty, which is not good. It is said that investors generally prefer, even if the taxes were higher, that investors will prefer, and investors in this case, we want to think even in terms of ourselves as business people, because we invest in our businesses for a return, that what we prefer would be even more than lower taxes. We would prefer a stable tax regime. So on the one hand, you could say that is being achieved by, for example, the removal of the inflation adjustment for excise tax. So basically what happens is that every year, the Commissioner General, that is KRA, will have what they call inflation adjustment for excise. So they say that because there is inflation, the excise rate is going to go higher. And of course, all the items that are affected by excise tax, with including water, including spirits and wines, if you're a partaker, then it means that they are affected. But when, for example, you remove the inflation adjustment, which is what the bill proposes to do, then it means that you don't expect for there to be a lot of uncertainty around excise tax. So on the one hand, you could say that is a good thing, but then you see something such as turnover tax. I think turnover tax is one of the taxes that has gone through a lot of movement. It started initially at, as a matter of fact, it started at 3% initially. Then it came down to 1%. At some point, it was married with presumptive tax, and now it has been taken back to 3% according to the proposal, according to the bill. So that movement, that uncertainty is what we are saying is not generally good for a tax environment of our business, for the business environment. We have also seen cases where the previous regime had, for example, closed some cases. We have in particular 2 cases which I think are interesting to note. One is NCBA, which is of course that is political. But NCBA, had been granted a waiver on the capital gains. When they did the merger, they were exempted from paying tax on that merger. And now KRA is revisiting that. Same case with EABL. They had a tax dispute where they reached an agreement, and the taxman said, based on this agreement, we are not coming after any more taxes. And now they are. Now that uncertainty is what we are saying does not bode very well for our business environment. So there's something known as the Laffer curve. I think it is consistent with the law of diminishing returns. And basically what this gentleman known as Arthur Laffer was positing is that as a government, when you raise tax, you will continue collecting more up to a certain point. And I think this is something that would be good for, in particular, our government to appreciate that as you raise tax, the rate of tax, then you will collect more and more, but that is only up to a certain point. And beyond that point, the more you increase the tax rates, you can see this is the curve for the tax, this is the rate of tax. The more you increase the rate of tax, then you start experiencing a diminished return on revenue. You start collecting less and less the more that you tax. So I'm saying that to say that probably raising taxes is not necessarily the best way, even if we have the problem of debt as a country. Just a general raise of tax rates may not necessarily result in higher tax rates or in higher collections. So some of the provisions that are on this finance bill, of course, you may have come across this, is the 35%. So what happens is that currently payee, the highest band is 30%, but this bill is proposing to increase that to have another tax band of 35%. And that is going to be for people who earn above 500,000 shillings. The other very controversial provision, of course, is the 3% National Housing Fund. And well, of course, that is likely to have a huge impact on our pay slips, or on the pay slips of our staff members, but also on the businesses, because if you're saying 3%, that is being contributed by the employee and 3% by the employer, then that definitely increases the cost of doing business and also reduces the take home for employees. Important note though is that the National Housing Fund, that provision is capped. There is a cap to it, so that it's not just a blanket 3%, it is 3% up to 2,500. Okay, which I still think is quite significant, because if you have say 10 employees, even if it's capped at 2,500, you're talking of an increase of 25,000 every month. And what is also likely to happen is, as an employer, you may also want to cushion your employees a bit, and so probably have a bit of a tax raise. Either way, we can see that that is one of the provisions, and which is why I think it has been quite outspoken. I think many commentators, parliamentarians, and so on have been very vocal on this one. So that's the National Housing Fund. Now, when you look at the 35%, I think one of the things that, in my opinion, is good to appreciate is that, number one, it only affects people who are making more than $500,000. And in fact, if your salary is just on the border at $500,000, your current payee would be, say, 142. Your new payee under the new provision would still be 142. If, say, your salary is 600,000, currently you're paying a payee of 172. Under the new law, you would be paying 177. So when I look at that 35%, it doesn't look to me like it is very significant compared, say, to the impact that the National Housing Fund is likely to have. Because you see, I mean, I don't know, not many Kenyans earn this much, you know. Many of us would be below 500. So only a few people are going to be affected by these 35%. And even then, it looks to me like you would say it is a manageable increase, and which is arguably consistent with the canons of taxation, which is to tax those who make more, to be taxed more, and so on. But that, I think it's good to just understand whatever you're feeling around that, to understand that not many people are affected by that 35%. And even those affected, it is not because if you earn 600, for example, 600,000, and your tax goes up by 5,000, that is less than 1% increase. I think, in my opinion, that is one of the provisions which is not as bad as it has been put out. Notably, there are some very negative provisions. For example, there is the requirement that that is under the tax, that is tax appeals tribunal. If, for example, you have a case at the tax appeals tribunal, and the tribunal rules in favor of KRA, then what happens is that, or what the bill proposes, is that if you're going to object, then you should deposit 20% of the assessment before you can be able to appeal. I think that definitely is one of the bad provisions, for example, because if you found yourself at the tax appeals tribunal and KRA assesses you for 1 million shillings, and you object, you say, no, you shouldn't be charging me this 1 million, either because I paid tax or because whatever other reason, whatever reason you're citing, okay? Then the law proposes that before you can appeal that assessment, before you can object to it, that you deposit 20%. So you have to raise 200,000. So you see, if this is a tax that you're not supposed to pay in the first place, then as one person quipped, are you 20% guilty? Is that what they are saying? So that is one of the provisions that, for example, in my opinion, should not be passing, and which I hope will be dropped. As a matter of fact, it was there previous. It had been proposed previously, although the previous proposal was to have it at 50%, but it was shot down last year. So I don't know why it is again being sneaked in this year. So one of the other things we notice is on winnings. I think the taxman has had a lot of interest in the gambling industry or gambling sector. And one of the things we see is that there is a change in the definition of winnings. So that, so let me put it this way. Let's say, for example, that you're placing a bet. You're placing a bet that Man City is going to beat Man U has happened over the weekend. Now, so probably the bet that you place is what? Is 100 shillings, and the payout, okay, I'm not very conversant, but just using random figures. So let's say that you place 100, and the payout is supposed to also be 100, not the payout, what you're going to win is say what, if you place 100, let's say that maybe you're going to win another 100. So which would be your profit, because you placed 100 and now you got 200. So if you got 200, your profit is 100, and ideally that is what you should be taxed on. Now the current proposal is that instead of being taxed on the difference, you're taxed on the whole amount that is paid out to you, including what you had staked, or what you had placed as a bet. So that definitely does not appear fair at all, because there could be cases depending on, for example, the winnings. There could even be cases where the total payouts, if you were to be taxed on the total payout, you find that that your take home is even less than what you had initially staked. But the other reason why I brought this, why I wanted to mention about the gaming industry, is because it is one of the areas in which KRA has had a success in a trend that we are seeing. The trend that we are seeing is that the taxman wants to collect his money now, other than you having to wait and have to pay him later in the day. They want to have to collect at the earliest possible opportunity. So what they have done, for example, this is already in play. This is not part of the bill. What is already in play is that they have already connected their systems with the gaming companies, so that as we speak, the taxes are usually remitted on a daily basis. Now, that is the same thing that KRA is proposing for withholding tax. So if you know how withholding tax works, currently withholding tax works in such a way that if you withhold tax on say a supplier that provided you a service, then currently you're required to remit that tax within 1 month, or by the 20th day of the following month. But what the taxman is proposing is that instead of, or what this bill is proposing is that instead of waiting until the 20th day of the following month, then you make that remittance within 24 hours. So, of course, the thing is that it is working for the gaming industry, but the question is whether that is going to work for everybody else. So whether it's going to work for everybody else, because not all industries are like the gaming industry. I mean, when you think of the gaming industry, for example, payouts are on a daily basis. But for example, for professional services firm, then what happens is that I will make payments throughout the month. And then once in a month, as I am processing my VAT, I also process withholding tax. But we see this government wanting to have their money wanting to have the taxpayers' money at the earliest possible instance. That can also be seen in the way that most of the provisions are required to, or are going to be. The proposed date for many provisions is 1st July 2023. Ordinarily, what we are used to seeing is that when you have a finance bill, and when it becomes a finance act, then many provisions take effect on 1st January. But with this one, many of the provisions are actually taking place, or are going to take place if they pass with effect from 1st July of this same year. Now, there are some good provisions which I can mention. Number one is that when it comes to tax on rental income, currently it is at 10%, and the Act proposes to revise this downwards to 7.5%. So I think that's a good thing. Again, when it comes to wanting to have their money at the earliest possible opportunity, what this bill proposes is that where that tax on rental income, or where the rental income is collected by an agent, then they are saying that that agent should remit withholding tax on the same day or within 24 hours of them remitting their income to you. So let's say that OPP here is a landlord. I don't know if he is, wouldn't be surprised. And let's say that he has appointed me as his agent to collect rent on his behalf. So what the bill proposes is that, number one, you know that that tax on rental income is paid monthly, 10% currently. That is the residential rent or income, though commercial rent is different, but for residential rent, it's currently 10% and it is paid every month. So it's also paid by the 20th day of the following month. So what this bill is proposing is that where OPP is not collecting the money himself, but he uses an agent, say such as myself, then when I collect the rent on his behalf, once I remit, so as I remit the tax to him, then within 24 hours of remitting, I will have deducted withholding tax and remitted on his behalf. So, of course, what I have seen on social media is the misconception that the bill or the bill is requiring that all landlords appoint agents. I think that is just, well, that comment is laughable. That's not what the bill proposes. Though I wouldn't put it beyond these governments thinking, but that's not what the bill proposes. I know that it's possible. We've seen that anything is possible with it, but that's not what it currently proposes. In fact, this bill is good for landlords. I saw a commentary by the government saying that they expect that to trickle down to the tenants. I definitely have my doubts on that. Then, when it comes to something called exported services, last year's Finance Act removed exemption of exported services. So, what happens is that exports are generally zero rated. You know, that is whether it is exported goods or exported services, they are zero rated. And the idea of zero rating export is to make our businesses more competitive. What the Finance Act for last year did is to introduce or to remove exemption or to remove that zero rating of the exported services, not goods, not products, just services. So that, for example, if you do some work for someone in the US, if you provide like IT services to someone in the US, then now the Finance Act for last year was requiring you, and which came, and you see like this provision, that's what I'm saying, like this provision came into effect January this year. So it required that if you provide exported services, you had to charge VAT, which of course was making our businesses here in Kenya less competitive. Now, what this act proposes, or what this bill proposes, is to remove that VAT on the exported services, which I think is a good thing. Then, of course, there is a LPG, that is gas. They propose to, currently at 8%, they propose to remove that exemption. They propose to have an exemption, a total exemption, to remove the 8% and have a total exemption, which is a good thing. That is a good point to also mention that they propose to have 16% on fuel, which, in my opinion, is going to be drastic, to be detrimental, because you know fuel affects every other. It has a ripple effect that when you increase the prices on fuel, then it has a ripple effect. So that appears to me ill-advised. But the proposal is to increase VAT on fuel from 8% to 16%. If you remember how 8% came about, is that there was an outcry. And initially, Parliament, when they were supposed to pass that law, they pushed it forward by 1 year. Then when the 1 year lapsed, again, there was a public outcry. And the then president, former President Uhuru, did what was considered Solomonic. instead of doing away with it entirely and instead of charging at 16%, he proposed a compromise of 8%. That's how we ended up at the current 8%. So doesn't look a good idea to increase to 16%, but that's what the bill proposes. Excise inflation adjustment, I think I mentioned that. The way that KRA every year reviews the excise rates, then that is, they propose to remove that power from the Commissioner General. Then on tax refunds, currently tax refunds, they take up to 2 years. That's what the law says, up to 2 years for you to get your refund. Now they propose that you can be able to get your refund within 6 months. And also, currently you can only offset refunds against future taxes. But for now, they propose that in the new bill, they propose that you can be able to use those refunds to offset against not just future, but past and current tax liabilities. I think the other thing that maybe I can just mention is I have seen there is chamas. Chamas will be taxed. So will chamas be taxed? And were chamas already taxable? Now, if you were to read the provision of the current Income Tax Act says that where an association engages in business activity, and that business activity generates income which is more than 25% of the club's activities, then that business income is taxable. So chamas are already taxable under the current regime. The only thing that this bill proposes to do is to remove that threshold of 25%. So if you were to read the provision in the finance bill, it says that it actually excludes, it says that the business income of the associations or member organizations will be taxable, except, there's that except member subscriptions, renewal fees, and I don't remember the third one, but basically the activities of members, which will be member subscriptions, which will be renewal and contributions and member contributions. So if you're an association, for example, your contributions, member contributions, your new members joining, members renewing, all those are still not taxed, which they were not previously. They are still not taxed. The only thing is that if you engage in business income, previously, if that business income was only a small component, that is 25% of your income, then it wasn't taxable. But now the act says that if you engage in business income, or the bill proposes that if you engage in business income, no matter what portion of your income it is, then it's going to be taxable. Same thing with the, so just allow me to address some of those misconceptions, because I think when we have a national dialogue, if we do, then it should be on facts. I've seen motor vehicles. Motor vehicles, that tax was always there. It was 2,400, but then that tax, it applies to people who are in business. For example, if you have taxis, if you have a matatu, anytime before you take your matatu or taxi for inspection, you pay what is called advance tax. And it has been at 2,400 shillings. And now this bill proposes to raise it to 5,000 shillings. And that is 5,000 shillings in a year. And that is for someone who is in business. And that advance tax is claimable at the end of the year. It's offset against your income tax. So again, I think that it's not really a new tax. But in all of this, I think the thing I want to appreciate is that as Kenyans, we are more woke, we are more engaged in the civic activities or in our civic process, if you would say that, which is a good thing. So I think I would like to stop there, and then I can be able to take feedback and questions there. The bill definitely is one of the most voluminous we've had. I have seen some analysis from some of the professional firms are 80 pages. That's the analysis, not the bill itself. So when the analysis is 80 pages, then it means that it's quite voluminous. But I've tried to look at what I think would affect us as business people, and also generally tried to address what I see as some misconceptions and presented to you what I think is the good, the bad, and the ugly of the bill. Back to you, OPP.
Thank you. I think this is the approach you wanted. You know, because we are not politicians, we need to understand the facts as they are and how they are likely to affect us, the people in the corporate world, the people in the business world, something like that. So thank you very much for that. I know there will be enough questions. One question that has come up is from Christine, and she's asking, what of taxes with Kenya Power? The bills are very high. Does it mean Kenya Power keeps adjusting taxes every month or what? Most of us don't understand, because like last year, if I would buy a token for 1,000 shillings, I would get around 50 something units. Today, I get around 32. Yes. So how does that apply? You're muted. You're muted.
Well, of course, one of the things to note is that when it comes to Kenya Power, when we're talking of the finance bill, it has not yet become law, which means it is not as a result of the finance bill or the Finance Act.
Yeah.
And the other thing to note is that when you look at the breakdown of that Kenya Power bill, is that more than half, okay, which is the same thing, and unfortunately, which happens with the fuel, more than half goes to tax through, there will be a levy, there will be excise, there will be VAT. So more than half still goes to tax. So the thing is that if you simply adjust the base a bit, like you say that you are selling 1 unit at 5 shillings and now it is at 7 shillings, then the effect of that is compounded, so that it is 7 shillings now plus excise plus VAT plus a percentage of levy. So that could explain why. And of course, one of the other things you see is that when it comes to Kenya Power, I don't know if you remember, there's a time about 2 months ago when they had wanted to make the bills opaque, so that they say now you wouldn't get the breakdown. But that can explain why. That the fact that there is so much taxation on it could explain why they just wanted it to just be a blanket figure. But then, of course, again, it caused an uproar. But Christine, I think that's Christine. That's my opinion on Kenya Power. It's not part of the current bill, and it's true, the bills are very high. And one of the problems, in my opinion, now this is my personal opinion, is the monopoly that they enjoy. It reminds you of the days of those, I think many of us in this room were there back then, the days of Kenya Post and Telecommunications Corporation, when you needed to be connected to get a post office box. But just as the days of that behemoth were numbered, so I think also this monopoly will also come to an end, in my opinion. But that's an opinion.
Yeah, of course it will, but it's being resisted. Yeah, and the same thing with electric cars, which ought to be around, but I know there are politics around them. So somebody, Anne Murugi, says, thank you so much for simplifying this, Jeremy. A long live Power Monday. There is a lot of misinformation out there. Jeremy, please explain more about the LPG. Is it all of them or that 6 kilogram, recently when we saw that video going round about about that size and what is being lowered? Is it mtungi or is it the content?
Well, no. If it says LPG, then it doesn't matter which size. It would be all the gas. It would be all the gas. Now, of course. Anyway, I think I shouldn't venture into the politics of that. But there's some politics around that. But it is the entire LPG. So basically, gas should come down because the 8% is going to be, or is proposed to be, removed, and probably added to fuel, because fuel is now the one that is being proposed to go up to 16%.
Okay. Yeah,
Yeah.
they always tax motorists more and more. Thank you. Now, actually, one thing that you explained, which I was jittery about, was the idea that, you see, what we read around is every landlord needs to have an agent, and then this agent needs to submit the withholding tax. And now the question is, if somebody is having an agent, must you therefore have a qualified agent who understands all these things to do with withholding, and therefore they submit something like that? That was part of my question. Or any other person does not qualify to be an agent, therefore. Because most times I see people using agents. You use some caretaker there, use some other guy who may go and harass the tenants, depending on what type of tenants you have.
Yes. Now, generally, what happens is that when these provisions become law, generally you find that the implementation will not be difficult. It's like the 10%, for example. Let's take the current 10%, where landlords are required to remit 10% of what they collect. Of course, not all landlords remit. That's number one. Number two, even those who remit don't necessarily remit all of it. But by and large, you find that when that provision became law, landlords know they are required to submit 10% of their taxes, of their collections, and they do. So whether they do that themselves, whether they do that through their agent or through their accountant or through their nephew who is doing CPA, it still gets done. So the moment it becomes law, generally you expect that there will be compliance in that sense. So in the same way, for example, if that provision that where the landlords have an agent, the agent withholds and remits tax, if it passes, then what you can expect is that that tax is going to be either the agents will have to work in collaboration with accountants, or the agents themselves will have to learn how to submit. But generally, as a landlord, I don't want it to be said that I am not complying with the law that has been passed because my agent is not competent enough to make that submission. What I pointed out is that the bill does not require landlords to appoint agents. They just say where you already have an agent. So that's the clarification which I had brought. Thank you.
Yeah, there is a question. Okay, there is a comment from Christine. Christine lives in UK, and she says, I come from a country which has a high taxation regime. Actually, the proposed bill for where the country is headed, it's convergent to a fast developing African country. It's a sound proposal bill, but the challenge is our taxes never get to the end users, hostels, roads, and such other amenities. Yeah. Going forward, we shall see more tax increases. Let's embrace ourselves. Yeah. So that is to be forewarned is to be forearmed. Anne Murugi said, thank you for clearing that. Now, will the fuel pricing revision every month on 14th keep on, or it's the whole idea of making it stable? How will it be?
Oh, I don't see any proposal which stops that revision. That monthly revision by April, because the thing that is being excluded is the inflation adjustment. for excise. But for fuel, I think that will still continue.
Mm-hmm. Yeah,
Yes.
so now you know. Besides adding it up every other month, you you need to be aware of what is happening. Yeah, Christine is there saying, I hear most of the power is from independent power producers, and yeah, that is a different story. We may not be able to know much. Yeah, they have to be paid whether the power is used or not used. A very informative session. We know what to look for as we return to our businesses. Great. So I think that is good enough. I've not seen any other question. Anybody who has a comment would like to say something? I've not seen any other question that I've left in the chat.
Okay, so Paul, let me ask a question. I don't know whether it's a misconception or it is what is contained in the act. I think Jeremy tried to talk about it, but maybe I didn't get it clearly. Is it true that if you have a car, then you have to pay tax for all the seats in that car every month?
Okay. So what I'm sharing now, I hope you can see my screen.
Yes, but it's tiny.
Let me see if I can, so 1 minute. Is it any better?
I think the font is still pretty tiny, but there is no problem. You can just move ahead. I don't know if this is full screen.
No,
That's
anybody
better.
can just zoom in. You can just zoom in with your hand.
Yes. Good.
So this is the current income tax before you have the finance bill. Okay. So the current Income Tax Act, it says that the rate of advance tax under Section 12A shall be for vans. So if you check this, by the way, it is very closely worded to the finance bill. If you have a copy of the finance bill, which is doing rounds, and what you notice is that this tax has been there. It has been there at 60 shillings per passenger capacity per month, or 2,400 shillings. It is now proposing to make that to 500 per passenger per month, or 5,000, whichever is higher. So the point is that, number one, that tax has always been there. Number two, which is what I mentioned earlier, is that tax is applying when you are in business. It doesn't mean that now, since you have a car and you just use it to ferry your family or yourself to work and so on, you have to pay tax on it. But if, for example, your car is a taxi or an Uber, if you do Uber or a little cab or whichever other, or it is a matatu, then before you go for what they call inspection, you will be required to pay advance tax. And the point is that currently the advance tax was, you could say, 2,400 shillings, but now it will be 5,000 shillings. And as I mentioned, that advance tax is also, as the word suggests, it is advance, which means that it is offset against your income tax liability at the end of the year. That is that's the position, or the proposed position regarding motor vehicles.
Now somebody asked, and I've just seen, Edna asked that it is said 16% VAT on choppers and aircraft scrapped to help Wadusis import choppers. Your take, well, I don't know about that, but is it true?
Yeah, it's true. It's true. That one is true. Okay. And if I had to give my take on that, I would be turning political, and this happens to be a professional forum, but I can only confirm that yes, it's true.
That is true. That is a fact. Okay, now whatever you're going to do with that information is your own business.
That's up to you.
Okay, Olale saying great presentation. You sounded like the next finance CS. I don't think those CSS have this much information. they are political appointees. There was a proposed, that is Rajuai, there was a proposal that all cars, including private, will have to go for inspection, especially the over 8-year-old. I don't know whether that is a question, but is it included in the bill? I know there was such a discussion sometimes back, either last year or something this year.
Yeah, that's an interesting point that John raises, because if that came into effect, then it might mean that it might then move our cars into the brackets. Since these advanced tax is paid before going for inspection, it might move it might move our private cars into that bracket of having to pay advanced tax. I have not seen it in the bill, but it's also something that definitely that I remember that there was such a proposal. And what I appreciate from John is that I think that's very insightful also, because that may have the effects of if that passes, even apart from the bill, then it might have the effect of making even the personal vehicles or the private cars attract the advanced tax.
Thank you very much. I think we can leave it at that point. And I personally feel like I've really gained much insight. You know, that's why we need people like you to read it for us. We see it's so voluminous, I think hundreds of pages. Some of us feel exhausted. The same. So I'd like to invite somebody to give a vote of thanks. Maybe someone can volunteer, or I choose any volunteer.
Okay, OPP, can I do that?
Yes, Catherine.
Okay, sir, thank you. So good morning, everyone. And this is just to say thank you to Jeremy. This has been quite an eye-opener in terms of the conversation that we are having. There is a lot of information out here, some which have truth, that have lies. So having to listen to it from a point of knowledge is quite refreshing in the morning. And as somebody has said, Power Monday has become a powerful house where we are getting a lot of information. And even as we run businesses, it's good to know these small details. So I just want to say thank you. It's been quite insightful. We have learned a lot. And from the entire team, and also the leading team in Power Monday, we are just saying thank you to the speaker for the day. And this is quite an eye-opener as we are able now to disseminate the same to the people that we interact with. Asante sana, and do have a lovely week ahead.
Thank you. And I will be happy to ask Nancy, the same Nancy. Are you able to go through that profile?
Yeah, it's okay. CPA Jeremiah Rugunya is a practicing member of ICPAK in good standing. CPA Rugunya has demonstrated history of working with SMEs in financial management system setup. He is passionate about working with SMEs and startups as drivers of the economy and job creators. He's the founder and the lead consultant at Prolific Business Consultants. He has successfully led the firm to admission into Santa Fe Associates International. It's one of the top accounting networks in the world. He has a strong consulting professional skill in capacity building, training, taxation, online accounting, audit, and financial modeling. He's been featured in the global communities as one of the successful stories under the USDA founded AIMS program. He's a thought leader who has made several appearances on Saturday Nation and Metropole TV, discussing money matters and taxation trends. He's one of the featured entrepreneurs under the Entrepreneurship Roundtable in 2021, organized by Strathmore University. He's a professional mentor with several mentorship and business incubator programs such as Synapis, TechBridge Invest, Kamilimu, and Mama Ventures. Former chapter president, BNI Eagles, and current president of the Founders Network. I is the lead consultant in Prolific Accountants.